Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:17 a.m. Central Time, and I am recording this in preparation for the market day of February the 10th, 2015. So a little bit of action came into the futures market right around 6 o'clock Central Time this morning, probably influenced by the Greek situation. We'll continue to probably see the markets roil around as that situation seeks a resolution. At the time I cut this information, the U.S. futures markets, broad market indices were up indeed about 0.5% in general, with the Russell being the weakest of the four broad markets. And on the crude oil, it was weak, down about 0.4%. And you had bonds also down about 0.5%, gold down about 0.3%. Pretty much weakness across that complex. And overseas action, and this was probably cut a few minutes, just a couple minutes after the announcement started hitting around 6 o'clock. But at that time, China was up about 1.5%, Hong Kong flat, Japan some weakness, down about a third. Germany was up about a third. Germany obviously is often quite sensitive to these euro-dollar announcements and bond announcements. So much of this seems to fall on the backs of Germany, at least as a deciding partner of what gets approved. Oftentimes, Germany is a major player in that. The United Kingdom was down about 0.5%, so pretty mixed in Europe coming into this morning. In terms of macroeconomic announcements, it's really quite a light week altogether. Today, we have JOLTS, job openings, mortgage delinquencies, a couple orange flag reports, nothing that should get terribly exciting. The only thing I would note about this is that these are during the market hours, so if you're in an intraday trade at that time, you're going to want to be cognizant that you could have those reports hit and could cause a little bit of momentary volatility. In terms of tomorrow's action, you got the 10-year bond auction, you got normal Wednesday crude oil inventories. Don't really see anything else that gets me excited. So fairly quiet day through tomorrow on the macroeconomic reports. On our volatility measures, we've been flip-flopping back and forth between a VIX of 18 above and below. We were popped back above 18 yesterday. You see the short-term volatility here at 16.88. And then also you notice historical volatilities are all about mid-range, with perhaps the Dow being top third just barely. So fairly typical kind of historical volatility, perhaps just a bit above the midpoint for that measure. In terms of standard deviation moves yesterday, relatively quiet. We had some weakness obviously, but it really didn't go very far. And if I remember correctly, we may even had a couple doji candlesticks and so forth across some of these charts. So certainly quieter than it was, say, a week ago, but really back into the middle of the range, and really we continue this range bound activity. And in terms of our daily report, some of the key things, not a lot of changes here, so probably be a little shorter video for you today. But we continue to be in this, and I'm calling it the break of support, because we did have the false breakout on the bottom side. We have also followed that with a false breakout on the top side. We really continue to be somewhat of an elevated risk condition as we continue the range-bound activity. We do continue with our portfolio trader posture as uptrend under pressure. We do have position sizing, which is reduced on any new positions that you might wish to take. You might want to consider those opinions, 50% and up to 75% based on the volatility measure. Market timing models would point to a one-day outlook of very slightly bullish, 3-day outlook of neutral, and from a market posture standpoint, all 4 indices are bullish. They, from that aspect, do say that new short-term or intermediate-term trades are okay. But obviously, you've got a number of other warning levels. And indeed, we remain at threshold level 1, which is our yellow light, tap the brakes. Number of our volatility measures are at their normal settings. We did pop back above VIX 18. We still have 6 distribution days in the S&P and 5 on the NASDAQ. We did avoid a new distribution day yesterday, even though we had some weakness, but obviously this is a fairly high count and certainly not indicative of a strongly bullish and healthy market. VIX phase, really we have to call it neutral. We've been flipping back and forth. And everything else is really still pretty much the same. Our intermarket risk aversion, interesting enough, all are on risk on in terms of their leading directions at this time. Option income strategy is now outside the window of acceptable volatility, but it has to be noted that we've been flipping back and forth really between this 16 plus and we'll call it 19 kind of area. And in terms of other things of interest, you see from a sector analysis on a relative rotation graph, who the big players are right now. Biotech, has had a good bit of volatility, but in relative strength, it has actually been the strongest of lately as measured by XBI. Semiconductors have also been coming on. Now, utilities, of course, were the heroes and this is using weeklies. The utilities have been the heroes for much of the year, but really have been pummeled in just the last couple days. So be taking a closer look at any utility holdings that you have, and take a look at whether you should tighten up stops or perhaps take partial profits, or maybe even consider your position in total. Also, the interest rate environment has been in something of a shift. This is, of course, related to utilities as well, but this also will affect the REITs. So IYR has also been taking something of a hit of late. So these are considered in the intermediate term some of the strongest players, but some of this has been very much in flux in recent days. And from our market postures, again, relatively flat lines across here. In fact, I noticed on the charts yesterday on the broad market indices, we really are flat lines on our moving averages at this point. As you would expect, this deep into a range bound. So a lot of things will flip back and forth. You get a lot of false signals from a charting perspective in terms of if you're using moving average crossovers or other similar approaches. You'll get a lot of false signals, and really until you get a chart breakout of the range, you should be very, very careful with some of the buy and sell signals and just how meaningful they really are. And indeed, this set of indicators on market posture have been flipping back and forth, back and forth. Sector percent change, obviously general weakness yesterday, nothing horrible. Healthcare and utilities perhaps the most hurt. And indeed, you think about this, I mean, we've generally thought of consumer staples, utilities, healthcare as being our heroes, while energy and materials have been the dogs. There seems to be some indication of sector rotation going on. We'll want to continue to watch that to see if that's truly is an intermediate to long-term event. but we may be having the early signs of some sector rotation between last year's favorites and what might become this year's favorites, especially if we break out into a bull market. And for example, if crude oil and the commodity complex finds a bottom, if the banks, regional banks, and other financial sector components start finding favor, we could see a significant rotation between these bottom three here, the consumer staples, utilities, and healthcare, and some of these other players such as the biotech, the materials, the energy, and technology. So keep that in mind. This has not been reflected yet in our industry groups. We still show retail, railroads, transportation, internet, healthcare as our top 5. So we'll watch this as well to see if we start to see some rotation in those sectors and industry groups that make up the sectors. So as always, greatly appreciate your liking us on YouTube and your other favorite social media platforms. Facebook perhaps is the best place to send in commentary and just post to our Facebook page. Obviously, questions can also be sent into support@falconglobaltraders.com. Additional information as always available about the rest of our products, including our daily price guide product to help day traders, as well as information on the 3 live trading rooms, futures, options, and equities with free trials available on each. Disclaimers as always. Hit the pause button if you need more time to take a look at this. And as always, we greatly appreciate you each and every day at the Falcon Global Trading Community. Thank you and good trading.